Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from One Biopharmaceuticals. Will their financials reveal a blockbuster year, or will their numbers leave investors feeling sick? Let's find out. This report is essentially a snapshot of how One Biopharmaceuticals performed financially in the first 3 months of 2025. We'll break down the key numbers, see where they're making money, and what challenges they might be facing. It's not just about the numbers, it's about the story those numbers tell about the company's health and future. If you're interested in unraveling corporate filings, make sure you subscribe to the channel. We also have a Discord community linked in the description below. Join us to discuss financial reports with other investors. First, One Biopharmaceuticals released a press release announcing its financial results for the quarter that ended in March. The press release is attached as an exhibit to this report. Also attached is a presentation about the financial results from that same period. One Biopharmaceuticals updated its corporate presentation in May. A copy of the updated presentation is also attached as an exhibit to this report. The information in the report and its exhibits is not officially filed for certain legal purposes, meaning it's not subject to the same level of legal liability as some other official filings. It also won't be automatically included in other filings unless specifically mentioned. Now let's dig into some numbers to see how the company performed. Before diving into the financial specifics, it is useful to have some context. One Biopharmaceuticals is incorporated in Delaware. The company's headquarters is in Brisbane, California now. Let's see what is going on with their finances. At the end of March, One had about $317.8 million cash equivalents and marketable securities. This is a decrease of about $26.8 million compared to the end of December the previous year. This decrease is primarily because of the company's operating expenses, which we will get to shortly. Research and development expenses were $27. Expenses were $27.4 million for the same period the year before. This increase of about $5.8 million is primarily due to increased clinical trial expenses. The company is spending more on testing its drugs. It also has increased personnel costs, meaning it is paying its research team more. General and administrative expenses were $10.3 million for the 3 months that ended in March, compared to $8.9 million for the same period the year before. This increase of about $1.4 million primarily due to increased personnel costs and professional fees. It costs more to run the business, both in terms of employees and outside help. The net loss was $37. Take dollars and dollars, $19. Take a step back and think about what these numbers actually mean for One. This represents an increase in net loss of approximately $7.2 million. This is due to the increased operating expenses, which were only partially offset by increased revenue. The company lost more money this quarter than it did the same quarter last year. Let's take a step back and think about what these numbers actually mean for One. One is spending more money on research and development and on general costs to keep the company running. Their expenses are growing faster than their income, which means they are losing more money than they used to. But companies like One are very common in the pharmaceutical industry because research and development is expensive but can potentially pay off in the future. It's important to remember that One is a company in the volatile pharmaceutical industry. Drug development is a high-risk, high-reward game. While their current losses might seem alarming, they are not uncommon for a company at this stage. The crucial question is whether their investments in research and development will eventually translate into successful marketable drugs. So what's my take on One Biopharmaceuticals? The company is investing heavily in its research. This is essential for its long-term survival. They need to discover new drugs to survive. However, their increasing losses are a concern. They need to either cut costs or find ways to generate more revenue to avoid burning through their cash reserves too quickly. One of the biggest risks for One is the uncertainty inherent in drug development. Clinical trials can fail and regulatory approvals are never guaranteed. They are also operating in a very competitive market. Other companies are also trying to develop similar drugs. However, if they succeed in bringing a successful drug to market, the rewards could be enormous. The market for cancer treatments is huge and a breakthrough drug could generate billions in revenue. In conclusion, One Biopharmaceuticals is a high-risk, high-reward investment. Their future depends on the success of their research and development efforts. What do you think about Day One Biopharmaceuticals? Share your thoughts in the comments below. If you found this analysis helpful, please like this video and subscribe to the channel for more in-depth corporate breakdowns. Also, remember to join our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next video.